Great. Well, hey, thanks everybody for being here. What a great conference this has been. I was at this conference last year, and I got to say, they really knocked it out of the park this year. There's a lot of people, and, the conversations have been really good. So we're going to keep it going. On this panel, you're going to get some serious alpha, okay? When we did this panel last year, anyone who was paying attention, they made some serious dough.
I'm Thomas Hartman. I'm working on a protocol to make it possible to trade energy derivative-like instrument just using Bitcoin multi-sig, without using oracles or any of that kind of stuff. And I'm interested in the energy markets, and I'm learning about mining. And one of my most interesting questions is, where's the hash rate going to go? How much higher will it get in a year and 5 years? And trying to learn about what miners think of that. That's what I'm up to.
Thanks, Thomas. George, you want to let the crowd know what you're doing, who you are?
Hi, this is George Kampouridis. I'm with Y Offset, based out of Houston. Come from a commodities background, and I've been trading carbon credits for the last 3 years, both voluntary and compliance markets, and also exposure in the REX market as well. Myself also been involved in the Bitcoin mining and Bitcoin investing for a few years now.
Oh, hi, everybody. My name is Igor Gonta, and I'm the co-founder of RWA Holdings here with Chris. We're involved in bringing liquidity to all real-world assets, and through the convergence of TradFi and DeFi through tokenization. So we're pretty excited to see every asset really being tokenized, with the key to provide liquidity, because that's the missing piece, right? The world is starving of capital. So whether it's real estate or energy, carbon, commodities, art, jewelry, collectibles, this stage, anything, everything is going on chain, and so we're pretty excited about that convergence that's happening.
I'm Chris Mack, also co-founder of RWA Holdings. And yes, I was here last year with John. We made a pretty big announcement around Ordinals, and we've really extended. There's been so much growth in the last year with what we're doing with this technology, and it directly applies to all real-world assets.
Yeah, thanks, Chris. So I'm John Devine. I'm from Blockfills. Blockfills, we're a massive market maker to the Bitcoin ecosystem and to crypto more broadly. We focus on structured products, options. We help Bitcoin miners manage their balance sheet exposure from the block rewards and from any type of fees they're collecting from validating the blockchain. We also run a hedge fund for statistical arbitrage trading. For any fund investors out there that want to get into some statistical arbitrage, come talk to me about that. But let's kick this thing off. So as I said, last year when we were at this conference, Chris and I were on stage and we were talking about Bitcoin ordinals, and the crowd was looking at us like, what's an ordinal? And now I think the broader Bitcoin community is very, decently educated at least on what ordinals are. So let's start off, Chris. Number one, can you tell the audience, for who doesn't know, what is an ordinal? And then can you get into the clean Bitcoin ordinal that you pioneered and we launched to the public last year?
Yeah, so people have probably heard about it by now, but essentially an ordinal is similar to an NFT. There are a few differences, of course, technically, but people think of it very similar to an NFT, and it directly is on the Bitcoin blockchain, which is very useful, the most powerful blockchain in the world. And what we did with Clean Bitcoin Ordinal is created an offset for Bitcoin mining, and it's backed by renewable energy credits in order to offset that mining. And at the time, which was March or April of last year when we made the announcement, it was roughly 300 megawatt hours to create one offset. And now after that happening, it's 1,000, so over a gigawatt hour.
Okay, so tell the audience, how could they have benefited from participating in the Clean Bitcoin Ordinal marketplace relative to the increase in hash rate and the amount of energy that was required to create a Bitcoin?
Yeah, so you can buy these assets and trade them on our exchange.
All right, so just so everyone understands, Chris has created an instrument, a Bitcoin ordinal that directly appreciates in value relative to the amount of energy consumption required to mine Bitcoin. So if you're bullish on the amount of energy that's required to mine Bitcoin, you can own Bitcoin, yes, but you can also own a clean Bitcoin ordinal, which gives you that added exposure to the energy consumption component of the Bitcoin blockchain network, right? Chris, is there anything further you want to say about that? Where can people find this ordinal, this clean Bitcoin ordinal? Where can they get more education, and where can they trade it?
Yeah, so it's listed on our exchange, carbon.credit. That is the domain. It's pretty easy to remember. And we have both a primary and a secondary market. So you can buy from other people even after it's originated.
Yeah, this is a fascinating concept. It's a direct use case for ordinals that are not, the typical NFT, right? There's real utility in this product, and again, that's carbon.credit for all you out there. Thomas, you're also doing some interesting things in energy derivatives. Can you tell us more about what you're doing at Op Energy and give us the scoop?
Well, Op Energy is a protocol. It just like Bitcoin, and the idea is that you can, sort of similarly to what Chris was talking about, you can bet or guess if the hash rate or the rate of mining will be increasing in the future or not. So depending on how confident you are, you can make binary contracts. And it's Bitcoin-like in that it's anonymous. There's no custodians. There's also no oracles. And if it gets traction, then you could have a large market for making these guesses. So think of it as like a prediction market. Without relying on exchanges. So if there are ever attempts to censor exchanges or shut things down in that way, it won't matter because there's enough stuff that's doing price discovery outside of the centralized exchanges.
No, I like it. You want to go a little bit further on some of the use cases? I mean, so a lot of people say, well, if the exchanges go down, I mean, we're in a lot more problems than we can think of. Can you just talk further about the benefits of not being reliant on an exchange to trade these types of derivatives in these prediction markets?
So if you've got a lot of money in Bitcoin, it's a worry. I think it's always possible. It's less likely now. We've got ETFs, but crazy things can happen. And it's sort of like you never want to go into that and just say like, well, the government won't ban Bitcoin, So with this, you can basically do futures. You can say like, well, I think if the value of Bitcoin without being able to do price discovery on exchange is kind of like going down in the future, the hash rate will probably go down too, and you can make a contract on that just anonymously, untransparently. And peer-to-peer, just like you can transfer value peer-to-peer with Bitcoin.
That's fantastic. I think as we've heard at this conference today, hash rate is going to be a focal point of this next epoch, right? And being able to take exposure or take a position on the direction of hash rate is certainly going to be something that any Bitcoin trader or Bitcoin investor is going to want to throw into their portfolio. So check out Thomas at op.energy. Going to be a very fascinating time for hash rate. Let's continue though. Let's go back to tokenization. I think this is going to be, I mean, obviously it's a buzzword. People have been talking about tokenization at this conference already, but Igor, Chris, can you, number one, break down what is tokenization? And I don't want to hear, everything can be tokenized. I want to hear what are some real world applications for tokenizing assets? How do they come back to Bitcoin? Maybe you can also touch on how they can come into renewable energy certificates, carbon offsets for any types of miners that are trying to, mitigate some of their emission profiles with their mining operations. Can you give us the scoop and not the buzzwords?
So I'll start and then hand it to Igor. So the thing is, when we look at real world assets, we find that they're a little bit unlike. Now, yes, there are money markets, and we're seeing things like that come out. But when you really look at it, most of the assets are actually unique, and this is very similar to what we found in carbon and renewables and so on. And because of these unique attributes, they trade more like an NFT. They trade based upon a lot of metadata. Now, what we do is we publish all this metadata to the blockchain, make it publicly available, can be seen anywhere. And then the next question is, well, what do you do? And this, we've heard this question come up. Well, the key app is to be able to trade them on an exchange. And that's what we have. So I'll hand it over to Igor to expand that, but it's key to be able to trade these assets.
Yeah, and listen, I can't agree more with Chris. What we're seeing is there's sort of two things going on. So the buzzword that you're hearing is tokenization. Sure, that's the representation of any interest in any asset or business or set of cash flows as a token on blockchain. Great. A lot of benefits of that, right? 24/7 trading, cryptographically secure, open public ledger, cuts out middlemen, lowers costs, instant settlement, etc. Great. All that, great. But that's not enough, right? The real problem, which you need to solve, is the world is starving of capital. There's not enough capital to decarbonize the world, right? We need 2 to 4 trillion a year through 2050. That's the going figure. That's a lot of money, right? The traditional capital market system, while it lends and provides capital, it's not enough because it's only limited in a very constrained way to large projects that have long-term contracts like renewable energy only in certain instances. And it's very hard to fund groundbreaking technology that may be at a little earlier stage. So how do you provide that capital? Number one, you tokenize it. But number two, you actually have to list it somewhere, right? It needs liquidity. It's got to trade, right? When Apple went public, it raised capital on NASDAQ, right? Where are the exchanges? And that's what we have. So we are seeing some exchanges pop up, many decentralized, perhaps some centralized. But the final step is you need both. You need both, and we're seeing essentially infinite demand from the world for that capital. So we're early. Only 5 billion is traded, mostly financial, has been tokenized, but it's very quickly going all up the value chain, which includes real estate, gold, oil. We're already seeing, art, jewelry, fractionalization, all that. So we're at 5 billion. We have 475 trillion to go. So we're early.
Yeah. So it's basically, as you probably have heard, you can tokenize anything, right? But let's go back to the context of Bitcoin Energy Summit, right? Why we're all here. One of the most interesting assets that can be tokenized that comes and plays back into Bitcoin is renewable energy certificates and carbon offsets, okay? And if we think about these instruments as really being an incentive to build out more renewable energy technology, at the end of the day, a renewable energy technology operator earns either a carbon offset or a renewable energy certificate, okay? This is a free market way to price what type of value is the population going to put on a renewable energy project. That can be reflected in the price of a renewable energy certificate, right? If we want more renewable energy to be built to fund, to provide power to Bitcoin miners, for example, we need to incentivize the project managers for renewable energy projects. Tokenization is a way to bring liquidity into these markets. Right now, if I ask the public here, how can you go buy a renewable energy certificate? You would all say, well, I have no idea, right? But if Carbon.Credit or RWA can figure out how to bring a marketplace to the public to go buy renewable energy credits or certificates, the value of those certificates are going to increase, and the incentivization to build more renewable energy technology is going to make financial and economic sense, right? So the way I see this particular carve-out is if we can tokenize the incentive mechanisms, the renewable energy certificates, and the carbon offsets, we can drive liquidity into these marketplaces. We can elevate the price of these assets, and we can then incentivize project managers to build renewable energy technology. This is how blockchain, Bitcoin, and these incentive mechanisms all come together. And what Igor and Chris are doing at Carbon.Credit and RWA, they're bringing it all together with the exchange, right? So next time you're at the dinner table and you have one of your eco-conscious family members or friends saying, we're polluting the world too much energy consumption, Bitcoin takes too much energy, you can ask them, well, how many renewable energy certificates have you ever purchased? And they'll probably say, well, 0, okay? But now if we can introduce these mechanisms to facilitate the trade of these assets, there is no longer an excuse why anyone who is environmentally conscious should not be owning these certificates in their portfolio. George, you're an expert in this field. You've been doing this for a number of decades. Can you tell the audience the importance of renewable energy certificates, carbon offsets, and bring it back into the tokenization?
Definitely. The renewable energy credits or certificates, commonly said, they are definitely an essential part of offsetting. So you, like any Bitcoin miner in this sense, and any corporate, let's put it this way, but let's talk more specifically about the Bitcoin miners, they have to offset their carbon footprint. By buying a renewable energy certificate, they basically buy a portion of this part of the energy that is being produced greener, let's say, according to every state's level of RPS, which is Renewable Portfolio Standards, that the utilities have to produce a certain amount of energy. The same thing happens also in Europe with the guarantees of origin. It's a similar market. And then we also have the IREX, which is the most international market, which is unbelievable what happened in the last few years, where basically a utility in India can exchange IREX with a buyer in the US. And that was never the case before. So that's also an expanding market that provides exactly that, more liquidity into getting the appropriate financing for being able to finance greener chains and basically more efficient projects. So this is where also the carbon credits come along as well. I mean, renewable energy certificates are one part of the story. Carbon credits and even Bitcoin mining facilities being able to register their own carbon credits will help them significantly become more efficient, while they also have the component of being able to sell those credits also in the market. So it works both ways. We have both the so-called insetting practices and the offsetting practices. And these two can create a much more reliable and much more efficient environment for any type of high-consuming power generation facility, in this case, the Bitcoin mining complex, which basically, from what I understand, is about 100, 150 terawatt per year, hours per year, roughly consumption on a global scale. And with the hash rate increasing constantly, I mean, 200 exahashes, I guess, per second is one of the latest approximations. I mean, we're getting into higher standards where there's the need for more computing power. This means that we will have to consume more energy. This energy needs to be offset. The same thing happens also with data centers. And that's why basically the keyword is becoming more efficient. This type of practices, believe it or not, started from Central Europe. The Germanic countries and the Scandinavian countries were the first to actually do all that before even Kyoto, before even any international agreement, because they needed to preserve what they had. So the Austrians, for example, a tiny country, like are some of the leading places for biogas. We see that with the renewable natural gas market in the US. We've seen that how this model was adapted basically by Governor Schwarzenegger, because, well, he comes from there originally. He adapted the same model in California. We have the low carbon fuel standard. All these things are in a chain that means they want to help the industry produce more effectiveness and become more efficient. The same thing is what should be happening also in the digital sector. And of course, I agree with the tokenization. We will end up having digital wallets. We still need centralized exchanges to the extent where we need the regulators to be able to come into situations like what happened with FTX. Unfortunately, the decentralized components are not very clear yet how this could work. But we're getting there. And I think that instead of having registries in order to register the carbon credits, or depositories, or any kind of custodian facilities, we could definitely translate that into tokens and digital wallets. And this is where we'll probably be heading to.
Yeah, that's fascinating insight, George. I appreciate that. So the alpha here is tokenization is here and it's not going anywhere. So let's get educated on what tokenization is, how we can participate, and how we can use that technology to push our society forward, just as we've used Bitcoin to lay the foundation to push our society forward as well, right? So tokenization, Bitcoin, renewable energy credits, if you're bullish sustainability, if you're bullish Bitcoin and you understand the fundamentals of Bitcoin, the Bitcoin protocol and energy consumption is going to be an increasing slope, then you need to be involved in the clean Bitcoin ordinal that Chris has done from Carbon.Credit. You need to go take a look at that. I'm only pressing on that point really hard here to finish this thing up, because when we said this last year, it kind of fell on deaf ears, and I think a lot of that had to do with education. But anyone who was paying attention last year absolutely crushed it. Okay, crushed it with the clean Bitcoin ordinal, and it's bringing the education of tokenization, sustainability, and Bitcoin into one asset. So, Chris, before we finish up, do you want to give any last thought on clean Bitcoin ordinal, where you see it today, where it's going, the pricing mechanisms, a final word for the audience here on that asset?
Sure. So one thing I wanted to mention was, I've traveled to a number of different conferences to speak, including COP28 in Davos. And what's interesting is, yes, number one is we need an economic incentive, and that's exactly what this product is for, including the carbon and REX. But it's not enough. The price, number one, needs to rise on all these assets. And number two is we need to offer additional investment into debt and equity. And that's where we're headed with this. So in addition to just being able to buy a REC, whether you're a Bitcoin miner, whether you're an energy producer, there's 2 to 4 trillion that's needed. And the only way to do this is to tokenize and to trade those assets.
Fantastic. Any questions real quick from the audience before we walk off the stage? All right, well, thank you. You got one? Yeah, go ahead. What do you got? Yeah, the question really comes down to, when there is a tokenization of a renewable energy certificate or of a carbon offset, how can someone who goes to Carbon.Credit to buy one of these assets, how can they know the validity of the asset, or that it's in line with a regulation or whatnot? Chris, do you want to answer that question?
Yeah, so the key is that they're all certified by a third party and put into a registry, and you may have heard of a few of them. There's Gold Standard, Vera. For REX, there's MREX, IREX. George also mentioned this as well. And so it's very important that all this data is validated. But the key is that we can utilize the blockchain in order to have a permanent record of that data.
Yeah. And Igor, if you want to finalize this.
Yeah, I just wanted to add one thing. In addition to carbon and REX, right? And kind of weaving the whole Bitcoin mining theme to renewable energy, right? Bitcoin miners are, in my opinion, one of the largest, if not the largest enabler of renewable energy build-out. They're the only ones that are buying long-dated power from solar and wind developers and batteries in Texas, for example, right? I mean, who are the other long-term buyers? And you need long-term contracts in order to get those projects financed and equity invested. So where does tokenization come in, right? And why is project-specific capital that can be put into these wind and solar projects, for example, right, important and not generic, right? No, it's not generic, right? It's very specific. It's that solar farm in that region in Texas that's selling to that Bitcoin miner. And it's win-win, right? They get, very low predictable power, right, in order to mine. And the renewable energy farm gets the contract in order to be built, right? And that greens up the grid, right? Including that contract not just being for power, but also REX, right? Where can tokenization actually enhance the value? Well, that project, once it has the contract, or even if it doesn't, that's the thing, even if it doesn't, if a wind farm wants to be built without a contract, in traditional finance, it will never be built. It won't get financed, it needs a contract. It won't get the leverage, it won't attract the equity, the tax equity, tax credits from the IRA. It needs a contract. With tokenization, no, it doesn't. No, it doesn't. There's plenty of investors in the world that will invest thematically in renewable energy. They'll go earlier on the risk curve. They'll invest in earlier projects, technology de-risked, but maybe not neatly fit into a capital markets box. I need this, I need a contract, I need equity, I need everything lined up. And the final piece is once you actually tokenize that developer who needs the capital, right? That's the problem we're solving with an exchange. It needs to go public, right? You can represent it on blockchain as an NFT, but where does it get the money, right? From global investors that want to green up the grid and save the world, right? So it doesn't burn up, right? The beauty of tokenization is you can issue 3 tokens. You can issue an equity token, a debt token, it needs both, and a separate REC token. Because some people are equity investors, some people love debt yields, and some people just want to buy carbon or RECs. 3 sources of capital. And none of them are available unless there's a long-term contract. So I just wanted to say
That's
it's
helpful,
much
Igor.
broader, right?
That's helpful. All right, everybody. That's all we got for you. Hope you learned something here. Have a great rest of your conference.